So it's this is called a TGIF Friday, the uh, 17th of September. I am Bosin Amafaye. Of course, this is how we begin to wrap up the trading week here on Frontier Africa with Joshua Debisi, who is the head of banking research and analysis at Vetiva Capital Management. By the way, Vetiva Capital is hosting on Thursday next week is West Africa Capital Market Conference, bringing all the big names within the financial services industry in West Africa and beyond together. Top big names from the Africa Finance Corporation, the AFC, as well as the ASEA and others within the West African markets or exchanges in Nigeria, Ghana, and Cote d'Ivoire will be on hand. So keep that in mind. Next week, Thursday, the 23rd of September. In the meantime, you can see a mixed trading day for the African frontier markets. Nigeria was down 0.15. BRVM was up about 12 basis points. EGX fell more sharply on its final trading day of the week for Thursday, 1.37%. The NSE, the Nairobi market, was down nearly 40 basis points. And the GSE, the second largest exchange on the continent, fell sharply 1.66%. In East African markets and the economies and businesses, this is how the Central Bank of Kenya is warning that the country's borrowing could lead to deficit or default in payment if the level of borrowings by the Kenyatta's administration continues. The Kenya's online postal firm, TAS Technologies, is planning its expansion in the East African community and Southern African markets. Safaricom is looking to rake in as much as 35 billion shillings by installing smart meters for the Kenya Power Company PLC, which is listed on the Nairobi bourse. And Afrexim Bank is giving $500 million to Equatorial Guinea to support the country's economy. FX provide for Ethiopian commercial banks, to support trade facilities. Ethiopia is the Africa's second most populous country and one of the top leading and largest economies after Nigeria. And Uganda's local revenue collections was about 1.57 trillion shillings in the month of August. Joshua, weigh in on the Safaricom very quickly. There may be Afrexim Bank on trade finance facility, but Safaricom looking to install smart meters for the power holding companies. If you try to correlate this with Nigeria in terms of the meters that we're looking at to make sure that the problem of what's called crazy electricity bills can be done away with, is this the way to go?
Well, definitely. I think obviously smart metering is the ideal solution at this very moment. I don't think there's a better solution because obviously, estimated billing, I'm sure, any way it is implemented worldwide can always be disputed for one reason or another. But with smart meters, you know exactly how much electricity you're using and you can pay for exactly what you need. So I think it's definitely a good idea. It's a good strategic plan. Now, obviously, we've seen the issues that are involved in the rollout of smart metering in Nigeria specifically, where they're being produced locally, thankfully, but the uptake is still lacking to a very large extent, and we've not seen the kind of coverage that would encourage us to say that this plan is working, even though the meters are supposed to be given at an affordable price or even free in some cases. So in the case of Safaricom, I'm still a little bit. I need to see the story develop a lot more, just due to the fact that we need to see what level of implementation we're going to be dealing with. Because if you can cover the entire country and everybody is on smart meters, obviously it would save the consumers a lot of money, and it will also help to monitor exactly how much electricity is being used. But I think that's definitely a positive thing. It's a good sign.
Okay, so
As
here is
for actually, I want
yes,
to
very quickly.
just
Sorry, just yes. For Kenya,
yeah.
the central bank is warning about the country's level of borrowing. This sounds a little bit familiar, isn't it, in terms of
Yeah,
sovereign debt?
absolutely. Yeah, that's exactly what I wanted to touch on because that's a bit of a warning sign. But I'm happy that at least in this case it's the central bank that is warning if borrowing remains unchecked that there will be likely debt default because as we are fully aware, We are on course to borrow anywhere between $6 to $10 billion this year. Very much, in terms of, I'd say, long term debt. Now the issue is, I think, our debt servicing and debt servicing in general is too high in terms of government revenue. Sure, debt to GDP is fine, but debt to government revenue is way too high. And we spend almost all of government revenue, the equivalent of almost 100%. I think it's about 98 kobo for every naira made currently in Nigeria. So I'm wondering where Kenya is currently, because if they're nowhere near us and they are saying these things and they are giving these warning signs, then I think we have to start, alarm bells have to start ringing, because the level of debt. Obviously, I understand the reason behind this debt, being raised is obviously for capital projects, for capital expenditure, and to sort of improve the economy. The problem is that we are entering into long-term projects that may not begin to bear fruit until a lot longer down the line, if they are even completed. In a lot of cases, most of these capital projects are embarked on with no encouraging signs that they will ever be completed. So if you're just borrowing money to dump into, infinite projects or
Mm.
perpetual projects that never get a chance to be completed and to start earning revenue that can be used to pay back those debts, then you're creating more problems down the line. You're kicking the can down the line, and unfortunately, there will be risk of default. What I will say is that we are in the 21st century. We're in a bit of an era where it would be a lot easier, I think, to manage, just due to the fact that I think if we're getting, dangerously close to the edge, what would happen? It would just take, a few smart leaders, a few financially savvy leaders to go and sit down with the likes of the IMF or the World Bank and say, look, we don't want to default. I know you don't want us to default. So why don't you give us a restructure? So, consolidate all our debts and then give us a new payment plan. But obviously, they would only do that if you agree to their terms, and their terms will obviously include austerity and things like that. Cut down on government spending and the
Yes.
like. But unfortunately, I don't see um any other pathway towards, redemption, just due to the fact that we're not in a productive situation, at least in Nigeria. Kenya is a bit different. They are still doing quite well with regards to exporting. They're producing on a very positive level. Now, the only issue I have is I'm not entirely sure about what their own debt to government revenue ratio is. Once we have an idea of where that is, we can compare it to Nigeria. But in case of Nigeria, I know that this path we're going down is not sustainable at all. You can't. The only way to raise government revenue is to increase productivity, because changing the tax policy up and down will only get you so far. It will only move the needle so little. So increasing the pots, making the country more productive, and adding more revenue streams is the only way to move forward. And if, barring that, then there has to be a cut on government spending. And I don't know which will happen first, but something has to give very soon.
Something has to give very soon. I agree with you on that point. Something has to give very soon. A number of folks had also advocated we have a whole lot of debt capital within the economy, close to a 1 trillion naira. And why is it difficult or impossible for the government, for the authority to sell down on this debt capital and make them come back to life and then realize local and this cheap money, which comes at little or no cost to the government in local currency, and you can just deploy them straight in the same local currency into this infrastructure projects. Since you're not borrowing, you can as well go to sleep in a manner of speaking. But of course, a whole lot still need to go into the how we plan to execute and what are the economic benefits and the linkages of this infrastructure to the other economic actors and activities within the system. All of that don't really seem to come up very clearly in some of the projects that we execute, not just in Nigeria, but in a number of African countries. And I think it's a whole lot of conversation still need to take place around why these projects seem to be non-bankable in the manner of speaking by the private sector that can really provide the deep pocket for it. But here you're looking at Nigeria's. I'm sure you folks in the markets, Joshua, working a lot looking into Nigeria's 3 billion to $6.2 billion euro bond. There's a conference call later today at 3 p.m. Or for an investor call on that. the World Bank has discontinued its doing business report due to ethical issues and all of that. It was initially suspended last year because of irregularities that the World Bank says it discovered in the 2018 and 2020 report. The ranking globally of ease of doing business has now been discontinued. The World Bank, in a statement yesterday, says it will look for a new framework and metrics of measuring ease of doing business around the world. The IMF is giving an emergency $67 million in support for Equatorial Guinea, while Bank of Ghana says the virus stimulus provided by the government and the central bank in Accra has boosted bank deposits to 110.4 billion shillings. Let's start with the Eurobond here in Nigeria very quickly. Josh.
Right. Well, like I was just saying, obviously this is just more borrowing, but the whole point is that the spread is a bit wide. Say between 3 billion to 6.2 billion. Let's be honest. If they can get 6.2 billion, they will take 6.2 billion. Across the board, the truth is that we need this at this very moment. Obviously, this will help to show up our reserves quite significantly. We've already seen in the parallel markets that our currency is devaluing on a it almost seems like in an hourly basis now. Every time you check the exchange rate, even though the government doesn't want you to check on that popular website, which they are attempting to silence now. But every time you check, it seems as if the exchange rate keeps going up. But so it's very, very pertinent right now that we get in some dollar flows. Unfortunately, the issue still remains that bringing in all this money is short-term fix to a long-term problem. And as long as we're unable to fully recognize that and adjust correctly in our economy, in our policies, we're going to be at a disadvantage going forward. But what I think is, unfortunately, this particular administration is just doing everything to get to the finish line, just doing everything to get to 2023 and then let somebody else worry about it. Because the truth is, these are not long-term, growth strategies. Borrowing money to sink into very, very long-term projects that very more often than not do not get completed is not going to, grow your economy. It'll make a lot of people or a few people very, very rich, but it won't grow your economy in a meaningful way. And we know that poverty is on the rise. Obviously, purchasing power has diminished quite significantly this year. I've I think all of us have borne witness to a massive devaluation in our currency, not just in comparison to the dollar, but in comparison to itself. The rate of inflation, even though it is moderating, it is still in the high double digits. And overall inflation year on year is going to be anywhere close to, 16, 17%. So the truth is we're we're going to have to find alternative solutions and fast. I'm not sure if this current administration is the right one to do so. But it is encouraging for investors to take 3 billion to 6 billion at whatever rates. I think the Access Bank um, Euro bond that just closed was
Yes,
done at about 6.12% or
yes,
6.15. I think so. The,
yeah.
the government will be looking to do something around that or below that. So at least that's encouraging. You say cheap dollars in that sense, but that's still 10, 20, 30 years of repayments that needs to be
Mm.
figured out.
Yeah, it's quite a whole lot. Thank you very much, Josh. And again, just give me 30 seconds of your thoughts on Ghana market. The central bank, they're talking about how stimulus has boosted bank deposits. It looks like everywhere this stimulus seem to have flowed into your banking system. There's a whole lot of money you guys are sitting on.
Absolutely. And it makes perfect sense. Obviously, any kind of stimulus that you give, first thing is that obviously we enter the financial system at some point. And so it's a sort of, a way of increasing money supply, increasing money flow, but the banks ultimately are the ones who benefit or who, profit from it the most because it ends up back with them.
Okay, great. Thank you so much. Let's touch on Southern African markets again. The the story for the IATF, which is the Intra-Africa Trade Fair for 2021, will be in Durban, South Africa. It's been severally postponed since last year during when the pandemic first reared its ugly head. Now the African Bank is ready to host this conference. Yesterday, there was the advisory council meeting of which former President Obasanjo was a member, and the top other Africans held in Durban, and the signing of the hosting community, which is Durban, KwaZulu Natal region, and the AIATF was done yesterday. Quite a very interesting ceremony. First Rand, South Africa, that's the bank, profit reporting a profit jump of 54% to 27 billion Rand for the first half of the year. Remember, 2 days ago, First Rand says it's washing its hands off any fresh funding for anyone doing dirty energy or coal business in South Africa. This announcement comes just a day after that. Gemfields is returning to 346 million Rand profits after a loss of 959 million Rand in the previous year. And Zimbabwe is also in the global Eurobond market looking to raise 200 million US dollars, and that will be listed on the new Victoria Fall Exchange, not the existing Zimbabwe Stock Exchange, by the way. And the whole power cuts and power problem in Zimbabwe that's reduced power electricity to 12 hours a day from 24 is being discussed between the officials of Zimbabwe, Mozambique, and neighboring Zambia. And the Kingdom of Eswatini says its inflation for the month of August remains unchanged, 3.9%. Josh, let's talk about Zimbabwe's $200 million in the global market. The roadshow is currently on in the US. Do you think everybody should go to the market because there's cheap money around?
Well, so what I'll say is, it's a great time for Eurobond investors. I'm sure their borrowing rate will be much higher than ours, obviously, for historical reasons. But $200 million, I think they're going to see a lot more demand than that 200 million because there are a lot of people with, you know, the dollars who are willing to take that risk on Zimbabwe. But I think obviously it's a positive one. Like I said, mostly the biggest benefactors or the biggest winners from this current round of borrowing around the continent are the investors, your portfolio investors, your FPIs. I think that will continue to be the case as long as the recovery remains very much L-shaped. We're not seeing a massive jump or return back to economic activity, and all these countries are needing to raise debt in order to stimulate the economies and get back on track. You see, obviously, Zimbabwe are having issues about power cuts. They're having only 12 hours of power a day. I can relate very clearly to that. But obviously, they're going to need, to increase their capacity, I'm guessing, or to increase their generation somehow. And so, speaking to their neighbors, I don't know if this money is going to, go towards that in any meaningful way. But it is important for the economy to get back on track. And we know the historical issues that Zimbabwe has had with regards to foreign currency and foreign exchange. But hopefully they're able to get back beyond that and start to stabilize the economy. I think that's the most important thing. And fixing their power issue is a very big step towards doing that for obvious reasons.
I agree with you. One thing that to give to Zimbabwe is the industrial sector. If you look at the industrial index on the stock exchange of Zimbabwe or in Harare, is always on a steady move. So despite the other problems the country has on the fiscal side and all that, historically, like you rightly said, that part seemed to be working. The electricity seemed to be a whole lot more stable and all of that. It's helping the agri value chain as well and all of that. So if that begins to become problematic, then as quickly as they can resolve it with their neighbors, where some of these energy linkages come from, Mozambique and Zambia, the earlier the better, to at least to keep the current economy on trajectory. But I think they need the $200 million to support their new foreign exchange weekly auction, by the way, and keep the new dollar that they floated also steady. Thank you, Josh, for those insights. Let's begin to wrap it up on the Northern African markets corridor, because the United Nations is asking Egypt, Sudan, and Ethiopia to get back to the table to discuss that $4 billion contentious hydroelectric dam that Ethiopia has built on the Nile River, which has been a subject of, or called the GER. It's been a contentious issue. Egypt had ran to the Trump's administration in the US when Donald Trump was still in office, looking for some help. President Trump tried to weigh in and arm twist the whole conversation or discussion in favor of Egypt. That's now President Trump is out of office, and everybody's scrambling now. Who will mediate in this particular issue? Now, all parties have been asked to return to the table anyway. Pharos Energy is selling 55% stake in Egypt oil concessions by the year 2022. And a fintech startup by the name Dope raised $18 million in Series A round. And CFG Bank in Morocco reporting half year net profit in the gray territory. So let's finish off, Joshua, on this particular issue with the GRD, which is the dam on the hydroelectric power dam built by Ethiopia on the Nile River. How do you think this issue will eventually get resolved? Because if you ask me, I can't look into the crystal ball. I can't really say how this will go.
Well, I mean, honestly, I'm not entirely sure, to be honest. But this is very much a political issue that needs to be resolved on. It's less a business issue and more a political issue. So it's just about coming to the table, sitting down, and having high level talks, just hashing out any issues that may arise and finding a compromise. That's the only way to go forward, really. And I think, unfortunately, I've seen a lot of stubbornness from a lot of our African leaders when it comes to conceding ground and not wanting to appear weak or to appear passive. So there's a lot of there's a lot of chest beating, let's say. But hopefully, I'm just hoping that they can sit down, put all their differences aside, put all their ego aside, and just come to come to a resolution. That's the most important thing, because obviously this can balloon into something a lot bigger than just some hydroelectric dam. But more
I,
interestingly, I think,
I
is the fact that, like you said,
go ahead.
Dope,
Mm,
no, Dope raised 18 million Series A. Obviously,
yeah.
Dope sounds a lot like Ope, but the thing about Dope you need to realize is that they're serving quite a big market there in Egypt. It's not just Egypt, but it's you know basically that eastern that whole northern African market leading into the Middle East, and so they have a massive consumer base and customer base. So I think this is the start of, like I said, African fintech. I'm always harping on about the fact that fintech is really on the up, not just in Nigeria and West Africa, but also in Northern Africa as well. And so we're going to continue to see more things like this happening, because investors, venture capitalists are looking for the next big thing. So they're pumping in dollars into any and all fintechs that show any signs of positive growth over the next few years. And so this is just another example of that.
Very interesting. And a report by a chain analysis just about 2 days ago said about what we've seen about 1,200% growth in value over the past year for fintechs in business in Africa. And I think that is huge. 1,200% in value growth, even during the pandemic period, is massive. It's as big as it can get. I'm not sure if we got anything like that anywhere in any business on planet Earth throughout the pandemic year of last year. 1,200% growth in value is huge. So give it to the Africa FinTech startup space. Thank you so much, Joshua Debisi, head of banking research and analysis at Vetiva Capital. We'll talk about the West Africa capital market more next week when we return here on Frontier Opening Bell. We look at the speakers and some things to expect, what's on the agenda from Vetiva Capital Management. Wish you guys all the best, and proud to be partners with Vetiva Capital and others in floating the 2021 West Africa Capital Markets Conference. See everyone on Monday. Have a great weekend, Joshua, and see you all back next week here on Frontier Africa Report. Bye for now.